This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Global economic attention should have shifted to tomorrow's US labour market report for September, but the US waterfront strike and the Middle East tensions has sidelined it. However, first in the US, there was a minor dip in the actual number of initial jobless claims last week, but a lesser dip than expected. There are now 1.62 million people on these benefits, the lowest level since November 2023. And as you would expect, the level of job cuts in the US has remained very low. Tomorrow's non-farm payrolls labour market reports are expected to show a rise in payroll jobs of 130,000. Perhaps in something of a surprise after the wavering factory PMI, the ISM services PMI came in much better than expected. It revealed the strongest growth in this sector since February 2023, amid faster increases in business activity and new orders. And that was mirrored by the internationally benchmarked version. US factory orders in August weren't as strong, little change from the prior month to be 0.6% lower than the same month a year ago. The US East Coast and Gulf port strike is entering its third day unresolved, but there are signs of progress in negotiations. The Canadian port strike has ended now. With China closed for holidays, all the equity market signals are being squeezed into Hong Kong, which remains open. And that is not good for their property stocks, which have had a heady run-up based on the stimulus signals. Now those property stocks are falling just as fast and just as sharply as investors realise the fundamentals are just not there. And the expected 10 trillion yuan fiscal bazooka is still to be launched. It is still being talked about and is still expected, but it won't happen till after the holiday week at the earliest. In the EU, there are signs that producer prices are rising again, up 0.4% in the bloc in August from July, but down 2.3% for the year to August, which was a lesser rate of decline from the prior month. And later today, the EU is expected to approve an increase in tariffs to as much as 45% on electric cars imported from China, a move that officials said would help protect European car makers from a glut of cheaper vehicles directly subsidised by Beijing. Those same subsidies have caused Toyota to pull back on developing EVs because there are no longer any commercial reasons to produce them. In China, price cuts along with those government subsidies helped the likes of BYD to boost monthly deliveries to all-time highs in September. Australian exports retreated slightly in August, but their imports retreated slightly more, so their monthly merchandise trade surplus stayed at about 5.6 billion Australian dollars. But that was only because gold exports stayed strong, boosted by sharply rising gold prices. Without those, their surplus would have halved. The latest IMF review of Australia isn't entirely convinced that they have a sustainable disinflation trend underway, and the IMF warns them to prepare to do more to get price stability. They also say Australia needs to build many more houses in its efforts to tackle unaffordable housing and its pressures. Container freight rates fell another 5% last week as weak demand overcame the costs of security issues in the Middle East. But that only dipped prices to 146% of pre-pandemic levels. Last week's weakness was mainly outbound China to Europe. Trans-Pacific rate levels were unchanged. Backhaul prices are now very low. Bulk cargo freight rates slipped 2% last week after a long run-up. They're now 13% higher than year-ago levels, the same from the pre-pandemic period. The US Treasury 10-year yield is now just on 3.84% and up another 6 basis points from yesterday. And the price of gold will start today at $2,655 an ounce, up $5 from yesterday. And oil prices are up $3.50 at just on $73.50 a barrel in the US, while the international Brent price is now just under $77.50 a barrel. Middle East tensions are now starting to affect these prices as the never-ending retaliation cycle shows no sign of ending. And the Kiwi dollar starts today at 62.2 US cents and down 0.5 cent from yesterday. Against the Aussie, we're 20 basis points lower at 90.8 Australian cents. against the euro are 40 basis points lower at 56.4 euro cents. That all means our trade-weighted index starts today at just under 70 and down 30 basis points from yesterday. And the Bitcoin price starts today at $61,134 and down another 2.9% from yesterday. Volatility over the past 24 hours has stayed modest at just on plus or minus 1.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.